Hello everyone, how are you? We're going to take a quick look at all the trades that we talked about over the last couple of days. So the first one that we talked about was the Nasdaq. Now again, when we're talking about the Nasdaq, we have sort of broken this level and we've moved pretty sideways here. Now when we took this trade here, I did speak about that. I think that that is not going to hit that level, and it's not a trade that I would be looking to take. But having said that, the bar, it didn't make a lower low, which gave the indication that we had an inside bar, then a double inside bar, and then we had a triple inside bar, and then we had the higher high. So it eventually broke to the upside. Now since then, we had this little small tiny bar where the market didn't really do anything, and then we've had two selling bars since. And today's bar, the market hasn't opened yet, so that can't be taken into consideration. Now, when a market is stalled like that, we generally get a movement in the overall direction. Why? Because there's an argument going on between the buyers and the sellers. We're unsure whether the market is going to go up or down. So then what happens is usually the overall consensus takes over. Now, in this particular scenario, the overall consensus is the market is going down. So that's the overall consensus here. So we would I'd expect this market to continue going down with the overall consensus. If we zoom out and have a look at it, we can see the overall momentum is going down. So I'd expect normal service to resume and for it to continue dropping. Now, can I guarantee that? No. Why? Because we've had a little bit of a push to the upside. We've had a little bit of good news on the stock markets. The earnings haven't been as bad as we've expected. We expected the earnings to be bad across tech, but they haven't been awful, if that makes sense. So we haven't really been as bad as expected. So it then comes down to inflation and also down to jobs data to a lesser extent. Okay, so we'll see what happens with that. S&P is not as negative as the likes of the Nasdaq. We had that selling bar yesterday, and then we have a little small bullish bar today. But again, that can't be trusted. It was a better entry, come back support and resistance here, and the movement to the upside was a little more than we've had here. So again, it depends on how you're managing your trade, whether you're moving your stop loss aggressively underneath it. If I had taken this trade, I would have moved my stop loss very aggressively to break even, and I'd be stopped out of that trade. For me, always put it slightly inside, so the spread. So whatever the spread is, I'd put that inside, and that means that I have sort of broken even. I've made 3 or 4 quid, but then it probably cost me 1 or 2 quid on the spread. So that's what I would always do in that. So for me, I'd probably stopped out of that trade if I was in it. The Dow didn't give it to us. German DAX, we didn't really look at a short here. It didn't really give us a setup. For me, it didn't go up and touch it. But anyone taking a limit order, you would have been in and around that area to short it. And if you did, you probably had a 1-to-1 off this big bar here if you were shorting it. French CAC didn't give us anything. UK 100. Okay, so the UK 100, very, very similar. It had an overall downtrend. It has hit this level once, twice, 3, 4, 5, 6, come into the area 7, and now it's hit it. So zoom in here. So we had this high test bar. We then had a trigger bar. And we had sort of a bullish day. Then we had the selling momentum to the downside here. You were in a slight bit of profit. And then look what's happened today. You would have been stopped out of that. Again, I wouldn't have been in that trade. And the reasons I wouldn't have been in this trade is, for me, there is too much power to the upside on the European markets. One, this here is a very bullish run. Two, if we look across the European markets, they are all bullish. Okay, there doesn't look like there's any slowdown on the likes of these. So this is why I wouldn't have taken this trade, even though it's there, but it wouldn't have jumped out at me. This for me is, we're looking at a little bit of momentum to the upside. So then can I guarantee that that's going to drop there? No. Now, anyone who did would have been triggered in and triggered out quite quickly. China didn't give us an entry here. We're still looking for this to continue dropping. And we've had a pretty big now spike to the upside. Aussie 200, again, we need to come back down to here. And then we'll be asking the question, should we now look at this to the upside? Japan 225, very, very similar. Back down into this area, hits this area, then we look for it to pop to the upside. Oil. So oil is sitting on this level. We've had one touch, two touches, and see this here? This is classed as a bounce. This here is classed as bouncing off that level. The bar is close to that level. I could probably bring that level down a touch and make it the open and close below it. We've had this super big low test bar, and it looks like the buyers are now trying to push that up. But for me, this is not a buy. Why? Because how do we predict that's the floor? We can't, is one. And two, if I enter here and my stop loss is here, that is a huge bar for it to get a 1-to-1 out of it. So I put a long position, entry above that bar, stop loss below it. So stop loss there. For this to hit a 1-to-1 is there. Look, and it's above that sort of support and resistance area. So for me, it's just too big a risk to reward for me to take this. And overall, the market is going down. But if this pops up and hits that area there, that could be something that I'm interested in shorting the market to the downside. That'd be something that would potentially jump on my radar. It popped up to here, come back in a bounce, retest, and then go again. If it goes the whole way back up to there, that's exactly where we look to short at. That'd be a pretty strong signal to short. So natural gas, so we had a double top there again, or triple top, whichever one you want to talk about. Again, it's a pretty big bar. But the reason I was happy with a pretty big bar here is that, remember, the overall momentum is going down, isn't it? There's more momentum. I'd expect it to sort of come back down to this area. It's hit its head, come down, hit its head, come down, hit its head, it has come down again. Now we're hoping the downside is a little further down into this area. But again, it's something that we sort of need to keep an eye on. Are you now nervous and jumping out of this trade at this particular point? Have you looked at the fundamental on oil and gas? Is there a big news announcement that means that oil and gas is now going to get stronger? What's been released from Russia? They're all questions you need to be able to answer to be in this trade. Wheat, no trade, hadn't pulled back there yet. Platinum, quite nicely, we had this sort of low test bar. Say low test as in a doji bar there. So we had a doji bar there, hit this floor, entry above it, but it's been pretty flat. It's been pretty flat here. Hasn't really gone anywhere. So you sort of make a decision on this one. Do we keep the trade open and let it run, or do we just cut our losses and jump out of this? And that's one of the questions you sort of have to be able to answer yourself. Do I just believe in a trade and let it run? The overall momentum is up. So the momentum is up. So you'd expect this to continue running to the upside. But again, it's one of those things that you have to, it hasn't done what we expected it to. We expected it just to run up. It's gone up phase 2. It's now back in the 4 hour phase 1. So if we get onto the 4 hour, That's what's ever happening there. So look, you had the phase 1, phase 2, and it's now in that 4-hour phase 1 again. So look, there's the low, higher low. There's the high. It has technically made a higher high. So all we want now is this to pop up a little bit more and then have a phase 2 and then go again. But is it ideal? Not at all. Copper, nothing was happening on copper. We wanted to hit its head here, and then we're looking for it to drop. Platinum. So platinum didn't quite hit our 1-to-1. Little bit frustrating that it didn't quite hit the 1-to-1. Now again, we looked at this entry, and we looked at this entry massively late. 1, 2, there was a third bar when we got triggered in. So that is not the ideal entry. The ideal entry on this should have been here. Okay, so that's where the ideal entry should have been, which meant we would have hit a 1-to-1 already. But there's where it was. Actually, it was a little bit higher because I think I had that as a 1-to-1, didn't I? How about there? So that's where the entry was. 1, 2, 3 bars. So again, look, we had that movement, and now it's come back down. It's sort of now double bottomed, and let's see if it pops back up. So we get this generally a lot of movement of sidewaysness. So you'd expect that to now pop up somewhere around there again and then drop again. But again, is this entry ideal? Nope. Did I take this trade? Nope. It was left there to see how it played out. Sugar played out really, really well. That high test bar that we had there, lovely rejection off this level. Look, bounce, bounce, bounce. Touched again. Textbook play. Actually, 1, 2, 3, 4, 5. Yes, we had a break of it here, but there's enough resistance at that level to tell us that that's when the sellers will be jumping in, and that's exactly what happened. Coca. So Coca was one of these trades that we looked at, and again it's 1, 2, 3, 4, 5, 6 touches. So now, yes, I understand that this movement is pretty damn flat. I understand that it's pretty sideways, and yes, I know it's broken once, twice, 3 times, 4 times, 5, 6, 7, 8, 9, 10 times. I understand that this has been broken 10 times, but I also understand that there is an area there that it keeps rejecting. So what we have to do at any particular time is work out, is this a valid trade? If it's a valid trade, am I happy to put my money at that particular area? And at this scenario, at this present moment in time, yes, we are at this moment up 0.5% at this particular moment. So now it's whether we sit tight and leave that trade alone, or whether you start dragging your stop loss in under. For me, I don't start really dragging my stop loss till it gets to 1-to-1, or when I am massively unsure about something, one or the other. Cotton. So cotton has done pretty much exactly what I expected. So it's double topped here, back to this area, and come back down. The only question I had on cotton was whether cotton was going to come back to here or bounce at this level. Look, 1, 2, I'm counting this as the same touch. So 2, and then this is our third touch. As far as I know, there's more touches backwards, but no need to look at this. So at the minute, it's now come back down. Now, the only question I have is it going to hit that red line here? Now, if you believe it's going to hit that red line, you leave that trade alone and you forget about today's bar. If you're a little bit unsure and you don't know and you don't want to take that risk, there's a couple of things you can do. You can get your stop loss and you put it inside that there. So which means now that if this pops up and hits this, you've covered all your fees and you're slightly in the green. So if there's no negative on that, you physically can't lose on that trade. Second thing is you can be a little more aggressive and you can put your stop loss there. above that high. And at that particular scenario, you would have banked in about 0.4%. About there, about 0.4%, which means then this is still running. So between there and there, there's actually 0.5%. So there's a 0.5% between where we are now and where our take profit was. Okay. So there's a 0.5% there still running. Or the last scenario is you take profit right now and you jump out of it, which is a 1% win, and you have taken your money and run. And these are all decisions that you sort of have to take when you're trading. You have to look at the analysis, you have to look at your risk to reward, you have to look at all those lovely things and what you've done previously and historically, and whether you should leave those trades running or whether you should start amending them. Okay? And they're all they're things that you learn over years of doing this. So the last two is silver. So we talked about silver, we talked about it hitting this floor and going up. Now again, we were banking on dollar weakness, which we haven't got. Yes, we had a break and retest of that floor there. Now, is that the strongest floor in the world? Absolutely not. We've broken the floor here, we've broken the floor here, and we have come back into that area. So, no, it's not the strongest level in the world. Secondly, we also talked about the break and retest here on the 4 hour. Let's see how that played out. So we talked about the break and retest, so bounce, break, and then retest on the 4 hour. And as we can see, you would have been triggered in on this bar here, and then stopped out on this big red one straight away. So you would have been triggered in and triggered out quite quickly on that trade. So that one didn't play out on the 4 hour. Again, is it in an ideal place? Nope. Was it the perfect trade? Nope. But some of you guys will have taken that trade, and unfortunately that didn't play out as expected. So on to the daily one. So the daily one is still running. We are in a little bit of profit at the present moment. But again, if you expect dollar to continue getting stronger, you let that run. Now, I have this as a token 3-to-1. If I was taking this trade, I probably would be out of that level here, or par closing my position and then trailing my stop loss underneath, if I'm being honest. But at this minute, we just have the token 3-to-1 there left, just to see how this plays out over the next couple of days and weeks. On to gold. And again, with gold, we're at break even. So gold was a much better level. Look, we had 1 touch, 2 touches, retested. So gold was a much better level. I know some of you guys took this on a smaller time frame. If you took it on a smaller time frame, well done. We'll go down and have a look at it now at the minute. But at this present moment, you are slap bang on break even. Now, I also have my take profit here as a 1.45. because that's where that level comes from. Now, we may actually get a little more resistance at this high before there, but I will cross that bridge when I get to it there. But at the moment, I have it at that. And the question here is do we expect a dollar to get weaker, which in theory would mean that gold continues to get stronger. Now, if we're right and we can catch the turn of this market, we can see this running the whole way up to anywhere around here. But on the opposite side of that, we could get triggered in and triggered out quite quickly and have a loss. So you have to work out, is this going to go to a 1-to-1? And if we have dollar weakness, then will that run? Will that continue? How long does dollar weakness continue for? On the opposite side of that, if we just get a bit of sideways momentum, you could very quickly be triggered in and triggered out. Okay, everyone, it's been an absolute pleasure. Thank you very much. If you have any questions, queries, put them in the chat box, or jump into my Discord channel, or jump onto my free course. Thank you very much, everyone. Bye-bye.